What if the key to understanding how the wealthy stay ahead was locked behind 3 simple letters, LA? You have probably never heard of it, but it might just be one of the most misunderstood financial tools in existence. The wealthy do not always shout their strategies from the rooftops. They build them quietly, systematically, and with intent. The moment you understand how law functions in finance, your entire perception of money and long-term wealth could begin to shift. You are a young professional. You want more for your life. More time. More freedom. More control. But every time you start learning about finance, you are hit with confusing acronyms, complex strategies, and information that feels like it was designed to push you away. The noise gets louder, and it becomes easier to put your head down and keep working instead of asking deeper questions. But one acronym, LA, deserves your attention. Because while most of the public has no clue what it means, the people who have mastered wealth use it strategically, and they use it often. LA might seem like just another set of letters in a sea of financial speak, but what it represents can unlock access, protection, and growth strategies used by some of the most successful people in the world. It is how risk gets managed, how wealth gets preserved, and how families quietly build generational power. This is not financial advice. This is financial awareness. This is the beginning of an entirely new lens through which to view your money, your future, and your freedom. And once you have this awareness, you cannot unsee it. Stay with me until the end, because law might be the most valuable concept you never learned in school. It might be the missing piece in your wealth journey. LA stands for Limited Liability Agreement, Loan Loss Allowance, or in certain private banking circles, Lifetime Legacy Account. Each term comes from a different financial context, corporate, institutional, and private wealth, but all 3 carry one foundational theme: structure. Not luck, not chaos, but intentional structure that creates resilience and long-term opportunity. These 3 versions of law serve different audiences. Banks use them. Businesses use them. Wealth managers use them. But everyday people, most have no idea they exist. And that is where the opportunity begins. Let us break them down one by one. Because once you understand the mechanics behind each law type, you'll start to recognize them in contracts, accounts, and conversations you never noticed before. You will see how the tools of the wealthy are often hidden in plain sight. The Limited Liability Agreement version of law is the foundation of smart business structuring. It is often used in partnerships and joint ventures to spell out financial responsibility and define who owes what if something goes wrong. The idea is simple: protect your personal assets from business risks. When you are entering a business deal or investing in a venture, and law makes sure that you are only liable for the portion of the capital or equity you commit, not everything you own. If the business fails, you are not personally destroyed. That is why entrepreneurs, real estate developers, and wealthy families form entities like LLCs, limited liability companies, and LPs, limited partnerships. When combined with a limited liability agreement, these structures create a firewall between their personal assets and their business activities. How it benefits you: you take bold financial risks while minimizing personal exposure. You build partnerships with clear financial expectations. You lay the groundwork for scaling with legal protections in place. Successful people structure their lives around liability shields, not because they expect to fail, but because they expect to try big things. Planning for every outcome, even the worst, is a sign of strategy, not fear. In the banking world, loan loss allowance is a concept that gets very little public attention, but it is critical. It is how banks prepare for risk. They know that not every borrower will repay their loan, so they build in a cushion, A buffer. A financial defense. The loan loss allowance is money set aside in anticipation of defaulted loans. It is a risk adjustment tool. It reflects not just caution, but foresight. How it benefits you. You begin to think like a lender, expect imperfection, and prepare anyway. You translate the concept to personal finance. An emergency fund is your own loan loss buffer. You learn to operate from stability instead of survival. The wealthiest individuals build loss reserves into every decision. They expect volatility, and they prepare buffers long before the storm arrives. They are calm not because life is easy, but because their structure is strong. Now we step into territory few ever talk about publicly. The lifetime legacy account. This version of law is not officially called that on paperwork, but it represents a set of powerful financial instruments used to transfer wealth efficiently, avoid taxes, and provide liquidity for future generations. These vehicles are often embedded inside irrevocable trusts, tax-deferred insurance wrappers, private placement life insurance. The goal? Preserve wealth across generations. Legally, strategically, invisibly. How successful people use it. They create structures that bypass probate and estate taxes. They use insurance not just for death benefits, but for cash excess and wealth growth. They layer legal protections to ensure assets stay in the family. These tools are rarely discussed because they require strategy, advisors, patience. But once implemented, they serve as the invisible infrastructure of generational wealth. This is not about hiding money. It is about protecting it with the same level of intention you use to earn it. Every version of law is rooted in the same psychological foundation. Plan ahead, expect turbulence, build protection. That mindset is why the wealthy are not panicking during market downturns, why they do not sell low out of fear, why they sleep soundly during recessions. They are not lucky. They are structured. Most people build tents. The wealthy build fortresses. The average person is not lazy. They are uninformed. They are overwhelmed. Financial education systems are broken, and most people are taught to chase income, not to build wealth. Law is not magic. It is design. And once you learn how design works, you realize that wealth is less about hustle and more about structure. Even if you do not have $1 million portfolio, you can begin to implement law-style thinking. Use contracts with clear language if you split expenses or invest with others. Start an emergency fund that serves as your personal buffer. Look into basic trusts or beneficiaries for your accounts. Begin journaling what you want your money to do after you are gone. Awareness becomes clarity. Clarity becomes structure. And structure becomes freedom. Let us make this interactive. Which law surprised you most? Drop a comment. Limited liability agreement, loan loss allowance, or lifetime legacy account. Let others see your insight. You might help someone take their first step. Like this video if your mindset just leveled up. Subscribe if you want weekly strategies most people will never hear. Play our How You Can playlist daily. While you work, while you plan, while you grow. Let it shape your subconscious into the investor, builder, and protector you are meant to become. You do not need to understand everything. You need to start understanding something. Law is more than a financial term. It is a lens, a blueprint, a discipline. Protect, prepare, preserve. Like, comment, subscribe. Welcome to the How You Can movement. Let us build your legacy, one lesson at a time.